Welcome back. Well, as we've been telling you, the cues across Asia actually are fairly muted. Lots of the bigger markets like China, Japan, Hong Kong, they are all down. Let's get the implied open up. We had, of course, a roller coaster move yesterday and a big dramatic rally by the end of it. We were outperforming a lot of the markets, and the implied open is saying that we could again start about 100 points higher. So let's see. Looking not too bad this Friday. Lots of stocks in focus. Plenty of earnings and news flow to go over. So let's straight away get to it with our list of top 10 stocks to watch. Vivek, let me open out with you. You have your plate full. Earnings, block trades, what all are you tracking?
Well, absolutely. Good morning. Quite a lot of action as far as D Street is concerned. Large blocks have resumed. And today, Bharti, Airtel, you will see a significant block that will go through. So sources indicate that Singtel, under the ownership name of Pastel, is looking to sell close to 0.8% stake in the company. The offer size is close to $1 billion. So the offer size at yesterday's currency rate is at 8,568 crore. Now, after this, if you're looking at the floor price at 1,800 rupees a share, 3.6% discount to last close, that is yesterday's close, lockup of 60 days on further sale of shares. Now, when you're talking about the current stake of Singtel, under Pastel, it's around a little over 9.2% stake. Post this, when you're looking at the effective stake, it will come to around 28%. That is important. Mittal Group stake currently at 23%. Now, the other stock in focus is JSW Infra. Remember, the company on May 12th had intimated the exchanges that the promoters will need to go ahead and divest close to 2% stake to meet the minimum public shareholding norms. So, in line with that, today there is expected to be a block of 2%. The total offer size of a little over 1,200 crores. And when you're talking about the offer price, it is at close to 288 rupees a share, 3% discount. Who are the sellers? The Sajjan Jindal Family Trust. Through the trustees, both Sanjay Jindal as well as Sangeeta Jindal will be pairing stake. Going with the red on both of these names, but you could see a recovery depending on whether the demand is strong.
Okay, all right, Vivek. Thanks a lot for that. Well, let's hop across to Ritu. She's here to tell us about IndusInd Bank. Well, Ritu, stock could be under pressure yet again today.
Absolutely, Nigel. It is fresh trouble for IndusInd Bank after that near 2,000 crore hit from the derivatives portfolio. Two more accounting lapses have now emerged. So in an internal audit, 674 crores was found to be incorrectly booked as interest income in the bank's microfinance portfolio and subsequently reversed in January. That, of course, follows the EY-assisted probe into these issues that the bank had flagged earlier. And separately, a whistleblower complaint has led to another audit, and that is an uncovered 595 crores in unsubstantiated other assets that the bank has quietly offset against liabilities in January. Now, the bank does say it is reviewing the employees who were responsible, strengthening internal controls, and will take action where needed. We've already seen the CEO and deputy CEO step down last month on the back of the derivatives discrepancies, but this makes it 3 lapses in 3 months. So you have brokerages like Morgan Stanley and CLSA sharply cut down the earnings estimates on the back of this. And of course, we're going with the red for IndusInd Bank.
All right, Ritu, thank you very much. We'll come back to this story in greater detail and talk about this, get you more opinion as well. JSW Energy is the next one on our top 10 list. Vivek is here with details. Vivek, morning.
Well, good morning. JSW Energy going into Q4, there were concerns given the fact that as far as demand of power is concerned, this particular summer season, it's been unseasonally or unexpectedly muted. And going into that, there has been weakness as far as merchant tariffs are concerned. So in line with that, operationally, it's been a muted quarter, and the back of the fact that merchant tariff rates that JSW has significant open capacity have actually seen quite a bit of a downtick. However, the street may look beyond that, given the fact that the company has given very aggressive capacity addition targets and has given a strategy 3.0 as far as the year 2030 is concerned. So let's look at the numbers themselves. Revenues are up 15.7% on a year-on-year basis at close to 3,190 crore. This is below what the street was anticipating. EBITDA at 1,209 crore, again below consensus estimates. EBITDA margin on a year-on-year basis has contracted, coming in at close to 38%. Profitability higher by 16.3%. But remember, there has been a higher other income of close to 100 crore. This is on account of the fact that the company has taken one particular provision as far as Mitra is concerned. So overall, slightly muted set of numbers. But let's look at strategy 3.0 that the company unveiled yesterday. The company now targets 30 gigawatt of generation capacity by 2030. Earlier, the target was just 20 gigawatt. Along with that, the FY 2030 run rate of EBITDA is expected to be almost 2.7 times to 3 times FY 25 pro forma EBITDA. On the back of that, JSW Energy going with the red, but there could be some intraday recovery, especially from long-term investors who buy into the strategy 3.0 of the company.
Okay, all right. We'll watch out for that. Vivek, thanks very much. In fact, the management of the company is going to be joining us at around 9:40 a.m. We'll talk about that strategy 3.0 and the road ahead for JSW Energy. More numbers. Over to Vamakshi then for PB Fintech. Good morning, Vamakshi.
Good morning, Surbi. Premium for PB Fintech stood at 7,030 crores. This is an uptick of almost 37%, and largely this growth is being driven by the new initiatives that the company has undertaken. The revenue saw an uptick of almost 38%, coming in at 1,508 crores. This is higher than Morgan Stanley's. This is in fact lower than what Morgan Stanley was expecting, but the operational performance has been strong. The adjusted EBITDA stood at 149 crores. This has doubled as compared to the same quarter last year. Adjusted EBITDA margin as well has come in almost 400 basis points higher at 10%. So this has come in much higher as compared to what Morgan Stanley was expecting. They also have come out with the report. They have an underweight call on the on the stock. Target price at 1,130 per share. They say that core new premium growth has moderated to 21%, driven by slower savings growth, but steep valuations drives underweight. Nevertheless, when we look at the numbers, it's a beat, so therefore going with the green for this counter.
Okay, all right. Thanks a lot for that. Well, hopping across to Mangalam. Mangalam, tell us about Patanjali.
Well, incredible numbers coming in from Patanjali, but the street was prepared for that because one, the company had given us their fourth quarter update, and secondly, we already know that palm oil prices and edible oil prices had seen a big surge that was visible in the margin contraction of all the users of these products itself. So revenue growth of 18%, we have an EBITDA jump of 37%, margins improving by a few basis points, almost 80 basis points, and the net profit on the back of that jumping by 76%. What was it led by? Edible oil. No surprises there. 21% growth in the revenue, but the edible oil EBITDA was up by 135%, and as a result of which we saw sharp margin expansion as well. The important thing, however, to watch out for will be edible oil margins have contracted quarter on quarter, and from the peak, edible oil prices have also come down as well. So can we see a contraction cycle beginning from the second quarter is something we'll have to track. For now, the stock opens in the green, but maybe see some sell-off from the top, largely because maybe the best of the cycle is behind.
All right, Mangalam, thank you very much for that. So keep an eye out on those names. Sudarshan is here with Endurance Tech and SKF India in focus. Good morning.
Morning, Prashant. So both the companies have reported Q4 earnings that are much better if you compare both sequentially and year-on-year. First, talking about Endurance Tech, it has reported a steady set of earnings with all the three segments, India, Europe and Maxwell, are doing better and have been outperforming the industry. For profit, it was up 17%, revenue has increased 10%, EBITDA too has moved higher by 8%, and company has managed to hold on to margins above 14% levels. For SKF India, Q4 historically has been better, and it's a healthy set of earnings with sharp improvement that company has seen in margin both sequentially and year-on-year. Profit is up 16%, revenue has increased by 1%, but cost controls have helped margin improvement, and here margin has improved to 23.4% from 18% that company reported in the same quarter last year. So I'm going with green for both.
Okay, so two green stocks on Sud's list this morning. Thanks for that. Upasna, coming to you now. Crompton Consumer and Keynes Tech. How are the numbers looking?
First up, let me start with Crompton. Overall good set of numbers, revenue in line while PAT and EBITDA margin beats the poll. Now, EBITDA margin beat was largely led by the positive margin surprise in company's lighting segment and the healthy growth trajectory in Butterfly. Now, revenue saw an uptick of 5%, EBITDA saw an uptick of 30%, EBITDA margin saw an uptick of 240 basis points at 12.8% versus the poll of 11.5. This was mainly supported by 700 basis points expansion in EBIT margin of lighting segment at 15.9. PAT saw an uptick of 29%, and company's key segment, that is the ECD, it saw a steady growth of 6%, which was in line with the street estimates. Now coming to Keynes, overall good set of numbers. Revenue PAT in line with poll, but it was a EBITDA margin beat, highest in Q4 reported this year. Now revenue saw a growth of 54%, EBITDA saw a growth of 76%, EBITDA margin saw an uptick of 220 basis points at 17.1 versus the poll of 15.8%. PAT saw an uptick of 43%. Now coming to the order book of the company, it remains quite healthy with a growth of 60% year-on-year basis and 9% sequentially, giving a strong visibility for FY26. Now, company achieves its FY25 EBITDA margin guidance of 15%, and coming to the revenue guidance at 2,800 crore, it stands slightly lower at 2,721 crore. So a slight miss on the revenue, but EBITDA guidance intact at for FY25 at 15%. So overall, good set of numbers for both of these counters.
All right, got that. Upasana, thank you very much for the details over there. Let's quickly recap our list of stocks to watch then. The ones that have positive news flow around them are PB Fintech, Patanjali Foods, Endurance Tech, SKF India, Crompton Consumer and Keynes. The ones that have negative news flow around them, Bharti, Airtel and JSW Infra on the back of those expected block trades. Then there's JSW Energy as well as, of course, IndusInd Bank. Okay, that's the stock list for the morning. Let's now talk about commodities. We have Manisha Gupta joining in with a roundup of all the overnight action. Manisha, morning. TGIF. What's happening in the commodity markets?
Well, it doesn't really look like TGIF the way the commodities are very, very volatile right now. But I'll start with the gold prices because they seem to be cutting losses. There's a rebound above 3,200. Remember, we've done 31.25 yesterday. It's trading around 3,200, not able to hold those kind of gains. But the support did come in after setback in peace negotiations between Russia and Ukraine. Having said that, the U.S. retail sales are weaker than expected. The U.S. CPI fell as well. And the markets do not have too much of news to continue to gain here. So you might be looking at further declines coming in for gold. Same is the case with the base metal prices also. Well, a couple of positives. One is the optimism over U.S.-China trade relations and the fact that Iran may reach nuclear deal with U.S. Crude is headed for a weekly gain of 1% right now, but the markets are looking at higher supplies from U.S., from OPEC and from non-OPEC as well, and that would continue to put pressure. Another area which has seen a bit of a decline in the Asian markets right now is the base metal prices. Fell 1% overnight. There are easing supply issues in Congo, Indonesia, Myanmar. The markets also are looking at rising inventories on LME and US, and that continues to weigh onto that space too.
Okay, all right. Manisha, thank you very much for that. So that's commodities in focus there. What we're going to do is we're going to take a quick commercial break here. We're going to come back with the management of Signature Global, who's going to talk to us about their fourth quarter earnings and outlook. Stay tuned.